Startup investor relationship management. That's quite the mouthful. But as a finance leader in a startup, it is a really important part of your role. And if you've never done it before, how do you deal with all these investors and their questions and what do you prioritize? Well, today that's exactly what I'm going to talk about. The challenges, some pitfalls to avoid, and how to best manage your relationship with your investors. Hi, my name's Alysha Randall and I am a fractional CFO, and I also run training courses for new and aspiring CFOs within startups and scale ups. I'm also the author of the book Financial Leadership Fundamentals: How to Become a CFO in a Startup or Scale Up, which I'll leave a link to below. So today I wanted to go through startup investor management, relationship management. The first thing that is probably worth talking about is who actually owns these relationships within a startup. I would love to say it's this person and this person, but actually that's not the case. So it doesn't matter if you're a head of finance, an FD, CFO, you need to understand where you stand with handling and managing the investor relationships. Is it you? Is it the founder? Is it both? Is it someone else? And it just really does depend. So, in early stage businesses, you're never going to have a formal investor relations department. So, when I worked for Funding Circle post an IPO on the London Stock Exchange, we had an investor relations representative and they did all of the investor comms. Obviously, the CFO is also heavily involved in investor relationships, but is working quite closely with the IR or investor relationship department. Now, in an earlier stage startup, and most scale ups, you don't have a formal investor relationship department, and therefore it does either fall on either the CEO or the CFO or both. So, my recommendation is to talk about this up front, particularly if you've been newly promoted or you have started in a new role within a startup or scale up. So, it's a conversation you should have quite quickly, quite early doors with your founder. It may or may not be included in your job spec, but it's probably worthwhile having that talk with the CEO to work out who owns what. I have found some CEOs, they love talking to their investors and they really want to own that relationship end to end, particularly if it's very early stage. And a lot of the board representatives are advisors to the founder. So they have brought in people that they feel are really good to help advise them on how to run the business, particularly when they're a first time founder or they're a founder that has entered in a slightly new industry and they want somebody with really strong industry experience. So that is a situation where the CEO or founder absolutely wants to own those investor relationships and therefore you kind of work in the background. Sometimes, however, then there may have been a recent fundraise, you've got new VC representatives on the board, and they require a lot more financial information, a lot more insights. They're probably a bit more into the detail than, say, what an advisor is. And in this case, the CEO or founder may be quite happy for you to own those relationships because you're able to answer the questions that they have much easily and quicker than, say, the founder. So this is generally post a Series B or Series C is generally when I see the CFO taking more of an investor relationship role. So I would say, again, just clarify who's responsible so that you don't step on any toes, but also so that you don't leave any gaps that might confuse the investors or erode any trust. The next thing that I think is really important talking about is aligning with the CEO. So the founder, if they want to keep the investor relationships close, that's great. You just support them behind the scenes. But if you're expected to lead those investor updates, you just need to make sure that you're aligned with the CEO. It's probably worthwhile having a conversation regularly about those updates so that you're both telling the same story. You need to know what is being communicated so that the CEO and you are communicating the same thing, at what level, and also how much detail. You never want a founder telling investors one thing, sending a different message to the updated deck. That's largely how confidence will get lost quite quickly, in fact, if you have the CFO saying one thing and the CEO saying another thing. So make sure that you're aligned. So if you are handling the investor relationship management, what are some good guidelines? Well, the first one is to be transparent. You don't want to sugarcoat particularly bad news. If there is a problem on the horizon, you want to flag it quite early. Investors don't like surprises, much like a founder. So if Q4 results aren't on track for whatever reason, it may be something internally or it may be macro, then really let them know and explain why. The second one is to communicate regularly. So even if there's no drama, you want to get into a rhythm. Monthly updates can go a long way. I will say, however, part of that regular communication, you may have already established in the shareholders agreement how regularly you're going to report. So check that first and make sure that you're doing that as a minimum. A lot of the times with the clients that I'm working with, it is a monthly update to the board and therefore the bigger investors, and then it's a quarterly update to the wider group. So that's the most common that I personally see with smaller stage European investors and boards. So if that's similar to you, that might be the way to look at it, but just make sure that you do that regular reporting. You want to be able to listen well. Investors will absolutely have opinion. Sometimes it's useful, sometimes it's not, but listen anyway. At least then you'll understand their risk appetite, their priorities and concerns. There is a fine balance between spending too much time with a small investor that takes up a lot of your time and also spending time on your executive role. So you do need to be mindful of that, but at the same time, you don't want to just fob all of your investors off because you don't have the time. And the fourth thing I would say is stay ahead of the questions. So really anticipate what you think they'll ask, have your metrics and your story ready. And then if they're asking for customer acquisition costs or gross margins trends, don't make them wait. Either send it to them, which you should have quite quickly, or make sure that if they're asking for this every single quarter or every month, then just include that within your regular pack. The next area thing I want to talk about was some pitfalls that you may want to consider avoiding when doing some investor relationship management. The first one is over-promising and then, of course, under-delivering. So you don't want to give them a huge amount of understanding of what your stretch targets are. Generally, stretch targets are kept internally. It's for the team to try and achieve with the understanding that they may not. So I would never communicate stretch targets as your baseline investor narrative. You really want to set realistic expectations so then you can over deliver if you can. The next one would be waffling or jargon. So you don't want to be using corporate speak, finance jargon. Investors don't want a finance lecture. They also don't understand the internal corporate jargon. Obviously, all of the employees do, the executive team, and potentially some board members may, but the investors don't. So make sure that you're not using terminology that they don't understand. And then finally, delayed responses. So even if you get a question, a quick response to say, I'll follow up with you in 1 to 2 weeks is much better than just giving them the silent treatment. So make sure that you respond even when you've got too much on your plate. And then finally, some common challenges with investor relationships is different expectations. You might be operating on one runway scenario when your investors are picturing another. So make sure that you are aligned. This is a good way of thinking about is any updates to the strategic goals should be communicated to the investors so that they know what you're working towards. Changing marketing conditions. So startups are quite volatile. Macro conditions are shifting quite a lot at the moment. So any changes to the growth plan, any pivot, again, let the investors know. You don't want to be silent on that. It just looks suspicious. And then finally, misaligned vision. So some investors may be pushing for short-term returns, but your job is really to balance that long-term sustainability. So you will find that particularly as you become more of a scale up and your early stage investors are keen to start looking at returns on their investments. That's not your job. That's their priority, not your priority. Your priority is to ensure that the business hits its strategic goals. So you may need to handle that with confidence and clarity. These tensions are not unusual. So managing investors as a startup CFO, it's not, not just reporting numbers. You really are managing trust. Often the CFO is seen as a voice of reason, the reality check, that, the one person that does see that whole business piece. So don't be afraid to challenge, to push back, or say no when it really matters. Because remember, when you're leading investor comms or you're supporting the CEO behind the scenes, clarity, alignment, and consistency are your job. So you do really need to own that. Anyway, hopefully that gives you enough of a framework and an overview of managing the investor relationships, particularly making sure that an understanding of who is owning those relationships. I think that's quite important. I talk about how to be a successful CFO within a startup and scale up. I release a video every single Thursday. So if that is something that you're interested in, then please do hit the subscribe button below, and also check out the links that I'll leave below, including my book, just got it here, Financial Leadership Fundamentals. So if you're interested in getting a copy of that, then check out the link below. And this will help you with, ideally, with both this and my FLF program, is to make sure that you're a skilled and confident finance leader within 12 months in a startup or scale up. So that's everything for me. I'll see you next week. Cheers.